If you're an ICT trader who is struggling with profitability, then this video may just be the eye-opener that you need in order to be more consistent with your trading and have more winners than you are right now. Because in today's video, I'm going to be talking about the ICT Market Maker models, okay? The most overcomplicated concept of them all, okay? I've seen paid courses, I've seen 8-hour long videos, I've seen it all. And I believe that this could be taught in a way more simplistic way so that everybody understands it without wasting hours or hundreds of dollars just to learn a single concept, okay? So the information that I'm giving you here is strictly information that is useful, and this is, in my opinion, all you need in order to use this to your advantage. Let's get into it. Okay, here we are on the chart. This is a drawn out example, as you can see. This is a market maker buy model, but I want you to understand that every market maker model starts with a consolidation. This is what we call the original consolidation. And as you can see, we have two curves. We have the sell side curve and the buy side curve. Let's start with the sell side curve. So as you can see, the highs are not taking out the highs, therefore creating buy side liquidity, right? And respecting bearish P arrays. That is when you know this is a sell side curve, right? We are starting a potential market maker buy model because we are creating buy side liquidity, respecting bearish P arrays, right? But we don't actually know that this is a market maker buy model until smart money reversal has happened, right? So how does that happen? Well, after price has created all this buy side liquidity in respective bearish P arrays, you want it to hit a higher time frame bullish P array. That could be a fair value gap, an order block, inversion fair value gap, whatever it might be, right? A higher time frame bullish P array, and then a consolidation, right? And then the buy side curve starts, right? Now we go from a sell program into a buy program, right? And what is this buy side curve doing? Well, it's taking out all the engineered buy side liquidity that happened during the sell side curve. And this is exactly when you want to look for your entry during a market maker buy model, right? And preferably you would want to target the end of the market maker buy model, right? That is the original consolidation liquidity as marked out here. This right here would be your final target, okay? Now keep in mind, this can happen on higher time frames too. You typically don't trade this on the higher time frame. You could use a market maker buy model as a bias, right? Say the 1 hour is in the middle of a buy side curve, right? Then you would know, okay, the bullish for the next couple of hours are probably bullish, right? Because we want to finish this market maker buy model, right? We want to take out all this engineered buy side liquidity, right? But on the lower time frames, you could trade this, okay? But how do you trade it? Well, let's say you trade a fair value gap, right? We have a higher time frame PD right here, and we have the consolidation. And as soon as we break away from that consolidation, that is exactly when you start looking for your entry. Now, preferably, what you would want to see is a manipulation move that takes out sell side of the consolidation before the distribution move, right? The move upwards. So this is exactly how a perfect market maker buy model should look like. Original consolidation, right? We have highs that are not taking out each other, therefore creating or engineering more buy side liquidity, respecting bearish P arrays until we hit that higher time frame bullish P array that then send us from the sell program into the buy program, right? Therefore a sell side curve and a buy side curve. Okay, so this was an example of a drawn out market maker buy model. All I want you to understand is sell side curve engineers buy side liquidity and respects bearish P arrays. Okay, buy side curve takes out the engineered buy side liquidity and respect bullish P arrays, right? Like this. And the market maker buy model is finished once we take out the original consolidation liquidity. Okay, now let's look at a market maker sell model. This is the market maker sell model example. Exact same thing, just reverse it. We have that original consolidation, the move higher. It respects bullish P arrays, right? And it fails to take out the previous low, therefore creating or engineering sell side liquidity, right? That is resting and waiting to be taken out during the sell side curve, right? to the buy side curve, sell side curve, right? And until we have that higher time frame PD array, we then reverse and go from a buy program into a sell program and go towards that sell side liquidity, right? And again, another clue to tell you that, okay, this higher time frame PD array successfully shifted us from a buy program into a sell program is if we start violating bullish PD arrays. As you can see here, let's say there were a fair value gap right here, and we managed to close below that. That now validates the sell program. You could also look for a market structure shift, whatever you need to do, right? Just look for the higher time frame PD array. Now this could be a 1 hour PD array, 15-minute, 4 hour, daily, whatever, right? Just a higher time frame PD array. And yeah, so then the sell side curve starts and hunts out all that sell side liquidity that was engineered during the buy side phase. And the market maker sell model is ended once we take out that original consolidation liquidity, okay? So exact same thing as the market maker buy model, just reverse it, okay? And again, let me draw this out real quick. So we have the buy side curve here, and then we have the, I don't know why my tool is acting up. Then we have the sell side curve here, right? Now this is where you want to find your entry, okay? During a market maker sell model, the sell side curve is where you want to look for your entry. You do not place any entries here trying to anticipate a market maker sell model, okay? Just wait until you have confident confirmation that we shifted from a buy program into a sell program, and then you can be very confident that price is going here next to that original consolidation liquidity, okay? So you look for your entries during the sell side curve in a market maker sell model, and you look for your entries during the buy side curve of a market maker buy model, right? But let's look at a few real examples of an actual chart, because this can be very easy to understand. It could look very, very different on an actual chart. So yeah, let's have a look at that. Here we are with the first example on oil. This is the 5-minute time frame, and as we can see, this looked like a nice buy program, and we are anticipating a market maker sell model because we have that consolidation here, right? And then a manipulation move, and then the distribution move that starts the market maker buy program, right? So now we wait and see if we hit a higher time frame PD array, right? As we can see, we are respecting bullish PD arrays. We have an order block here, right? We have a fair value gap right here that gets held. We have another order block here. So generally, we are respecting bullish PD arrays. Now I want to see price hit a higher time frame PD array and then start violating these bullish PD arrays, okay? That'll tell me that, all right, we are probably in a market maker sell model, and this is probably the next drawn liquidity, right? So we jump to the hourly time frame. What can we see? Well, we have a fair value gap and a liquidity sweep, right? But if we go to the 4-hour time frame, we also have this very fair value gap right here, right? So what do? We jump back to the 5-minute, and then we wait for something to tell us that we're now going from a buy program into a sell program. And remember, doing the market maker sell model, the sell side curve is where you want to find your entry, right? So for me, this is exactly what I need right here. We closed below a bullish fair value gap right here, right? And we also closed inside of this order block, which in my opinion is a very good sign, right? So I would honestly probably put my entry here, but that's a bit optimistic, right? Let's go to the 2-minute time frame and look for a better entry, maybe a 2022 model. See if we could get a market structure shift. That we get right here. Now I want to see a retracement into a fair value gap. We actually created one right here. So what I do now is I place my entry here, stop above the high, and I target the end of that market maker sell model, right? The original consolidation, okay? And then I let it play out. And this should hit TP. This is quite a long trade for me. But let's see if we can hit that take profit eventually. And there we go, right? So this was a very, very long trade. Typically, I would probably not hold till here. If you're not comfortable holding that long, what I would do is draw out the premium and discount of the range, and then target something around equilibrium, which is the 50% mark, right? So there are these equal lows here, which would have probably been my target had I traded this market maker sell model. You could hold until here, which is what I recommend. But you know, some people just don't trade that way. I personally don't trade for this long. I don't like to be in trades for this long. So if it's a bigger market maker sell or buy model, I typically just find a PD array or any liquidity inside of equilibrium, which is right here, and target that, right? So my trade would have looked something like this. Boom, right? And we hit TP fairly fast, okay? Now, what do you notice? We are obviously during the buy side of the curve, right? We are obviously holding PD arrays, bullish PD arrays, right? We have this order block and fair value gap, right? We are holding PD arrays, bullish ones. And once we start violating the bullish PD arrays, that is, you know, when I know, okay, this is a market maker sell model. I'm going to now look for my entry, right? So we violated a fair value gap here. We violated this bullish order block right there. This is also an order block that we also violated, right? So there's multiple violations of bullish PD arrays. And of course, we have that market structure shift, which is nice. So that is a perfect example of a market maker sell model. Now keep in mind that ideally you would want the consolidation to not sweep the sell side liquidity before, you know, making its way to the higher time frame PD array. But as you can see, we got a nice power of 3 here that sent us off into the buy program, and that is also fine. But ideally, you would want that accumulation liquidity to hold, right? Because that would just make it higher probability of it going to the original consolidation, okay? So yeah, that was a perfect example of a market maker sell model. Let's look at a market maker buy model now. All right, this is an example of a market maker buy model on euro dollar. As we can see, we have that nice consolidation with equal highs being made. So once price reaches here, the market maker buy model is finished, right? This is what you should use as your target. This is the 1 minute time frame. But what do we need to confirm that we're now switching from the sell side curve into the buy side curve? A higher time frame PD array, right? So we start in the hourly. We have a nice order block here that held really well, combined with a inversion fair value gap. But let's look at the 4-hour time frame. And as you can see right here, we have a nice 4-hour BPR, right? So we have our delivery, we have our high time frame PD array, right? So now we go back to the 1 minute, and then we look for an entry, right? As we can see here, price is respecting PD arrays, right? It may have violated this by a bit, but generally we are respecting PD arrays, right? We have a fair value gap here that gets respected. Another one here, right? So generally we are respecting bearish PD arrays. So now I want to see bearish PD arrays get violated, right? I personally do not need a market structure shift. I just need to see price invalidate bearish PD arrays in a market maker buy program, right? So let's see what happens. So we violate 3, so we violate 2 bearish gaps, right? Bearish fair value gaps, one there and one right here. Now this is exactly what I want to see. This is with displacement, right? So what I want to do now is look for an entry, preferably a fair value gap or an inversion fair value gap. So something that I would enter off of would be this right here. So we could place my long right there, maybe with my stop below that last fair value gap, targeting that buy side liquidity, right? The liquidity of that original consolidation. So let's see what happens. right? And there was TP, right? As you can see, I was not filled on this very trade right here, but that is fine, right? You could have taken this for value gap right here, right? I personally would have probably entered off of this inversion right here, right? There's plenty of entries to find here, and you know where the draw is because you have that sell side curve here, right? You have the sell side curve there, and you have that buy side curve here, right? And you have that smart money reversal down here because of that higher time frame PD array. Then you see a bunch of bearish PD arrays get violated, right? And that is my market structure shift. That is what I want to see, right? Because here on this sell side curve, we are holding bearish PD arrays. And to confirm that we're now switching from the sell program into the buy program, I want to see all those bearish PD arrays get violated, right? Preferably with displacement. As you can see, plenty of displacement. Now all you got to do is look for whatever entry model that you're using and apply it, right? So that is basically, in simple terms, what the market maker buy and sell model is. This is all I believe you need to know about the market maker sell model. Now imagine this was the 1 hour time frame, okay? This is the 1 minute. Imagine it was the hourly, right? You could now establish a draw on liquidity based on the market maker buy model, right? Because you have that sell side curve and you have that buy side curve, right? With the higher time frame delivery, and we are violating bearish PD arrays that we were previously holding during the sell side phase. And now we are violating them while holding the bullish ones, right? So you can now be confident that the draw on liquidity is the end of the top of the accumulation, right? The original accumulation. So you could use the market maker buy and sell model on higher time frames as your draw on liquidity, right? But generally, you only want to trade them on the lower time frames. I personally trade them on the 1, 2, 3, 4, and 5 minute. I don't go higher than the 5 minute when I look for entries. So yeah, you can use it on higher time frames, but for drawing liquidity, and then trade them on lower time frames, right? So I hope you enjoyed. This is all I believe you need to know about the market maker sell and buy model. So yeah, I will see you in my next video, hopefully. And until then, stay blessed and bye-bye.